Hey guys, hope y'all are doing well today. Today I'm coming at you with an update on my Robinhood and M1 Finance portfolios. I actually took the money that I received from selling my shares of Apple and I picked up two different ETFs in my Robinhood portfolio. So without further ado, let's get it. Alright guys, so here we are in my Robinhood portfolio, and the first thing I want to do is show you all how my portfolio has done. So over the past day, I'm down about 0.1%. Over the past week, I'm up about 1.5%. The past month, I'm up about 3.3%. Past 3 months, I'm up about 9%. Past year, I'm up about 21.26%. And all time, I'm up 21.47%. So over the past week, I made some pretty decent sized changes to my portfolio. So about 2 weeks ago, I sold off my shares of Apple because I just felt that it was becoming overvalued and I thought now was a great time to take some profits. So I ended up about 60% on my Apple position, sold off all my shares so I no longer own any Apple. And I took that money and I actually decided to pick up a couple shares of this new ETF that I have not purchased shares before of, and that's VXUF, and that is the index that tracks the world stock market excluding the US. So it does not own any US based companies. So the reason I decided to buy this ETF is mainly because of its PE ratio. So it is currently trading at a 17 price to earnings ratio as opposed to the Standard & Poor's 500, which is sitting up around 25, 26. So currently, I think this ETF's a little bit undervalued, and frankly, I think it's about the best use of cash at this point in the market cycle. I think the Standard & Poor's 500 is starting to become overvalued. I think the US stock market is starting to become a little bit overvalued. So I wanted to switch over to this international stock ETF and at least start to build a little bit of a position in this ETF. So I've been wanting to get a little more international exposure for a while now. I thought this was a great way to do it. It does yield about 3%, which I think is a pretty fantastic dividend yield given the growth potential of this ETF as well. So something I do want to point out to you all is that the dividends paid out by this ETF are really weird. So I went and I did some research on this ETF, and it seemed like one quarter they'd pay out like 15 cents, the next quarter they'd pay out like 51 cents, the next quarter they paid out like 36 cents. It was really weird and didn't seem like it had a whole lot of structure to the dividend payments. So I went and looked, and it turns out that a lot of international companies only pay dividends like once or twice a year. So because of that, it seems like some of these companies that this ETF holds, their dividends kind of clump together, so some dividend payouts are a lot bigger than others. I just wanted to point that out to you all in case you were interested in investing in it. Don't just take the last dividend payment and multiply it by 4 for your expected annual dividend yield. Make sure you at least look back a couple of years or so just to be safe. So over the past 5 years, this ETF has not done great, especially compared to the US stock market. It's only up about 18%, which doesn't seem too great. Over the past year, it is up about 14%, which is good, but still significantly behind the Standard & Poor's 500. But the reason I really like this ETF is because I think it may be a little bit undervalued right now. Now, I will say that there are some additional risks that you run investing in foreign companies, mostly because a lot of us American investors, we just don't understand like the tax regulations and other business regulations in foreign countries. So it's just something to think about. As always, you got to do your own research before you invest in anything, but I decided to pick up a couple shares of this ETF. The other thing I did is I picked up 3 shares of this high dividend, low volatility ETF. And the reason I did this is because it's also a little bit below the market in terms of PE ratio. I thought it was a good play because it allows me to get a little bit of income, and I really thought it was just the best use of my capital right now. So a lot of US stocks are valued pretty high, but the bond yields right now are pretty low. So it kind of set up a situation where it doesn't really make sense to be investing in bonds, and really US stocks and the stock market in general is about the only place that really makes sense to put your money right now. But at the same time, it's starting to become overvalued. So I've started to have a little trouble trying to figure out where I want to invest my money. And after doing a little research and a little bit of thinking, I decided that this dividend ETF along with the foreign ETF would be a good idea. So each share that I own of this dividend ETF pays me a little over 15 cents a month. I think that's pretty cool, getting that pretty consistent dividend payment every single month. It's very nice to have that income coming into my account. You know, right now I'm only getting like $1.55 a month or something like that, but hopefully I can build up my position in this ETF and slowly grow it over time. So not too much else to talk about with a lot of my positions. I am keeping my eye on Chegg. Chegg is back up to where it was a couple months ago. It had a pretty big drop. You all can see it peaked at around $44, $45, and at one point it had dropped down all the way to around $28. Now it's back up to around $40. So I am up about 10% on my Chegg position. If it gets too much higher, I may decide to unload a few more shares, take a little bit of profits. But I'm pretty happy where this is. And I have said in the past, it is a long-term hold for me. I think Chegg has a lot of potential going forward. So with that, I think we'll go ahead and jump on in to my M1 Finance portfolio. All right, so here we are in my M1 Finance portfolio, and for those of you all who don't already know, this portfolio is mostly made up of dividend-paying stocks. In fact, it's completely made up of dividend-paying stocks. The way I picked these dividend stocks is I picked every single dividend aristocrat, which are the companies that have raised their dividends every year for the past 25 years. Picked up all of those, which was about, I believe it was 50 to 60 companies. And then I picked up a couple real estate investment trusts that I really liked. And then I sprinkled in a few other stocks, a lot of them that I hold in my Robinhood portfolio that pay a dividend and are just companies that I really like. So we'll go ahead and look at how this portfolio has been doing. So this past trading day, I was down about 0.1%. Over the past week, I was up 0.4%. Over the past month, I ended up 1.7%. Over the past quarter, I ended up 6%. And I started this portfolio this past year, so my year-to-date earnings is going to be the same as my all-time earnings. And all-time, I am up 9.8%. So, like I said, this portfolio mainly focuses on dividends, so I'll show you all my dividend payments over the past week or so. So since the beginning of this year, I've received dividends from Automatic Data Processing, Brown-Forman, Genuine Parts Company, Walmart, Kimberly-Clark, Pepsi, Merck, AG&C, EQR, Equity Residential, Ben Franklin Resources, and Chubb Limited. So, it's nice seeing these dividend payments. I've said this before, but these payments used to be just like 1 cent or 2 cents here or there. And, now they're up around, 7 to 10 cents. So I'm certainly starting to see some growth in these dividend payments, which is exactly what I was looking for. Hopefully I can continue to fund this portfolio, keep investing, and hopefully we can see those dividend payments grow over time. The thing that I really like about receiving these dividend payments is as soon as you receive these dividends, you can do whatever you want to with them. You can reinvest them, you can use them to pay bills, anything you want. Obviously, I'm not going to be able to pay much of my bills with 5 cents here, 10 cents there, but the goal is to eventually get this portfolio to the point where I can pay some bills with it. Something else that I have been doing is I am investing in a Roth IRA. I'm actually using Charles Schwab for that. I'm not going to be able to show you all that today, but I have been mostly investing in like a U.S. stock market index fund, and then a dividend index fund, and then I also have some money in international stocks as well. As I get a little older, I'll probably add a little bit of money to bonds and treasuries, stuff that's a little safer. And the closer I get to retirement, the more and more money I'll add to those bond and treasury funds, just as kind of a safety net. So the next thing I do want to do is show you all the stocks in this portfolio that have done the best and the stocks that have done the worst. So since I started this portfolio, Apple has done the best for me. It's returned over 69%. I've talked about it in previous videos. Apple's been on an absolute tear. Target has done really well for me, and AbbVie has done really well for me. So AbbVie, not too long ago, they announced a deal where they were going to purchase the company Allergan. And I think initially people did not like that. So there was a pretty big sell-off of AbbVie shares, and I'm not entirely sure what caused the change of heart in investors, but I guess people decided it wasn't as bad of a deal as they originally thought, and so AbbVie has gone up quite a bit in price. In terms of my worst performers, we have Franklin Resources, we have Anheuser-Busch, and we have Boeing. So with that, I think I'm going to go ahead and wrap up today's video. If you liked the video today, please make sure you go and hit that like button. Please make sure you subscribe to my channel. And with that, JGraph out.